Hi everyone, Chad Shoop here, and welcome to my latest edition of Quick Takes. Today I have 5 stocks that we're going to run through in just 5 minutes. So we're going to break these down very quickly and to figure out whether or not we want to bank on them in the coming months, or these are stocks that are going to tank and head lower. But first, if you haven't yet, go ahead and scroll below the video, click subscribe so that we don't miss out on any of my upcoming bank it or tank it videos, my quick take videos, or any other analysis that I post to YouTube. Click subscribe so that we don't miss out. And if you have any comments, any stocks that you want me to cover, anything you want me to feature in an upcoming bank it or tank it or these quick takes, just leave me a comment below or post me a comment on Twitter and I'll be sure to feature them. Every stock that we mention, every stock that we talk about today and that we talk about in all of my bank it or tank it or quick takes are stocks that one of you all have left in the comment section. So I really appreciate it. Keep those comments coming and just leave me a comment below with which stocks you want me to take a look at in the coming weeks. So today we're going to dive right into the charts so we can run through these stocks. Our first stock is SFIX, and the ticker symbol there is SFIX. This is a great company because they really have been able to benefit from the pandemic, and you can see that on the price chart here that throughout 2020 they've continued to climb higher, and it's because of what they do. And they've created this way to ship clothing to your house that fits you, that's more of your style that you picked online. And then whether or not you keep it depends on how much you pay. If you pay monthly, if you don't keep anything, if you keep something, then you don't pay the fee. So they're really starting to revolutionize this retail experience on a whole different level than Amazon is. And when we look at this downtrend, we see this green support line way down here at the bottom and a red resistance line way up here at the top. And it's just a very wide range. So even though this is a stock that I personally like for the years to come, it's on my tank it list at the moment because it hasn't broke out of that red resistance line. Our second stock that we're going to cover today is PayPal, and this is another online-based company. They've disrupted the payment industry tremendously, and they're still out there collecting a lot of payments from the online shopping movement that we've seen during the pandemic. Again, this is another stock. It soared here in 2020. This stock is up 100% from the lows, and you can see that the little pattern that it's trading in over the last couple of months, it just continues to climb higher, and it looks really steep now that we're zoomed out. But when we zoom in, it doesn't look so crazy. I mean, this is definitely a bank it stock. I love that it's in an uptrend, unlike SFIX, which was heading lower. This is in an uptrend, and you have a great opportunity now to add to this stock, to own it, because you have the support area trading just below where the stock is at. So if it breaks this support, then you want to get out of it because shares are heading lower. But for now, this is a great opportunity that you can jump into the stock. So this is a bank it stock for today. Our next stock is Jumia Technologies, and this is essentially the Amazon of Africa. And you can see on the chart when they IPO'd, it was back here in about April 2019. But this stock, it's going to be on my bank it list today, and part of the reason is because it's an Amazon-like company. I love the e-commerce platforms that they're creating in these different countries, and you can see that the stock went to next to nothing, around $2 a share, after it IPO'd around 30s. But now it's started to come higher, and what I liked, and the main reason I made this a bank it stock, is because it's starting to create this rounding bottom that we can really benefit from a stock standpoint. As it starts to climb out of this, we also have this nice little uptrend that it's created, and even though it's near the top of this trend, this is a stock that you can't think of as more of a buy and hold investment because it's going to be volatile. It's more like an option, so we're going to see some wild swings. So there's enormous opportunities here for a big pop, and that's why it's on my bank it list today. And since we are on Amazon-like stocks, I wanted to feature Alibaba next. This is the Chinese e-commerce platform, just like Amazon, but over in China. They're an enormous platform over there too, so they're finding success. They're not like Jumia. They're doing well, and you can see that the stock is up about 100% over the last 2 years or so. And it's a bank it stock. Again, I love what these companies do on the e-commerce platforms. And what I like is that we have this wider uptrend with this red resistance on the top and the green support on the bottom. But it created this little price channel here during the rally, and then it broke out to the upside. So now we can use this red resistance line as a short-term area of support. We want the stock to hold above this key level and to continue climbing higher from this point. So this is a bank it stock. Now our last stock, we had to talk about Amazon because everything else today was all about online payments in the online space, and it's another bank it stock. And you can see that this one has just ripped higher like a rocket ship here over the last few months. It's up 100% just in 2020 from the lows to the high. So it's an enormous run, and it's a bank it stock, but I'm going to have to tank it for today because over the next 12 months, I don't really think that Amazon's going to be much higher than 3,000, really much higher than the 3,300 price that it hit a few weeks ago. Now, it could get back up to it. But what I really see happening is Amazon starting to consolidate during this price range before it maybe breaks out in a couple of years. But for now, just the market saturation that we've seen in the US and the growth that it had during this pandemic, I don't see how they're going to continue to grow from this moment. So out of all these Amazon-like companies, my favorite's Jumia, most upside potential, definitely the most risk in that one. But then Alibaba, it's a great company, has definitely clear trends for us to trade here, even after its massive surge that we can continue to ride higher. And then Amazon's kind of the last one. If you own it, it's not time to sell it. I don't think it's really going lower, but it's not giving us an opportunity to trade it. So we're going to hold that one, and it's going to be on our tank it list for today. So that's all for my quick takes today. Just leave me a comment below on the stocks you want me to take a look at in the coming weeks, and I'll feature them in an upcoming Bank It or Tank It. Until next time, I'm Chad Shoup.